CLS Weekly Market Review. I'm your host, Robin Murray, here today with Chief Investment Strategist Scott Kuby. Hey, Scott.
Hi, Robin. How are you doing?
I'm good. So it's College World Series time here in Omaha, a really big event, obviously. And last week, an event of similar magnitude, at least this is what Scott is telling me, happened in the ETF world in regard to MSCI consultations. What's the big news, Scott?
You know, I've learned that maybe this is more important to me than most people, but MSCI announced whether they were going to include China A shares in the overall China index and thus the emerging market index as well. And what they told China was maybe. There are a few issues that they want China to clean up. Now, the A shares are, just for people who aren't as aware, are ones that are traded on the local exchanges in Shanghai and Shenzhen, and they limit foreign ownership, so they've been hard to include in indexes. But China's made some big steps, and MSCI's asked them to make a couple more. My anticipation is that those shares will be included at a reduced weight of about 5% in November of 2015 when they get these last few issues cleaned up. There's some other changes that are being made, and I think that's going to be a good thing because China's A shares are about half of the overall Chinese stock market, and most indexes don't include them right now.
Okay, that's pretty big news.
Well, at least for me.
At least for you. All right, well, let's talk about healthcare stocks.
Okay.
Those have been performing really well in recent years. Is that going to continue?
You know, it's tough to say. The numbers have been great. Over the last 3 years, healthcare has been up about 30% a year, where the market's been up about 20%. So that's a big amount of outperformance on a yearly basis over 3 years. Earnings have been very good. Sales growth has been great, but we have seen valuations go from about 17 times to about 24 times per year, which is a big increase in valuations. The reasons have been that those fundamentals have been attractive with the strong sales growth that I mentioned, but also new drug approvals have been much higher than expected, and particularly in certain types of drugs that target smaller audiences or a smaller number of patient groups, but are more expensive. For instance, a cancer drug that costs $150,000 a year was recently approved, and that's been very good, especially for biotechnology companies.
Okay, well, finally, I want to talk about something that we went over with JJ a little bit last week, and that's retirement. What can you tell us about some of the key reasons why financial planning clients are failing in their retirements?
You know, one of the big surprises is it wasn't performance, but instead it generally was either family or splurges. So on the family side, either a divorce came and there just weren't enough assets to support two people living separately, a lot cheaper to live together. And then we also saw where children were asking for a lot of money from their parents, and that really derailed it when they over-supported their kids. On the splurge side, second homes, which they bought maybe before they were retired when they were at high earnings, were hard to support on a retirement income. And then sometimes retirees would get bored, start a business that required a lot of capital, and that business would fail, and that permanently reduced lifestyles. There were some others, but those were the big ones that caused people to fail, not performance. We found as financial planners do a really good job helping people prepare for retirement.
Great. Well, good to know. Thanks for your time today, Scott.
Thanks.
All right, and that's it for this week. We'll see you again next Tuesday. Thank you for your time and trust in CLS Investments.